let me ask you first. We just heard the news from Peter Cook
Sure.
that they are going to have a vote today on the House side.
Right.
Do you think that moves the ball forward? Is this good news?
I think it is good news. It's a necessary first step. The House needs to act to raise the ceiling. The Senate will do the same. I don't think there's any magic to the length of time. Speaker Boehner has suggested, 6 months. Leader Reid wants to get it past the election, and obviously President Obama does for completely clear reasons. But, I think the key concept is already agreed, at least in both the House and the Senate, maybe not yet by the White House, which is that we're going to have cuts equal to the amount of the ceiling increase. So that's the basis for an initial agreement, at least on the narrow piece of the debt ceiling.
But now, from an investor's standpoint, tell me where you are on this, because we've heard a lot of people say for the last week or so, if we had a market crash, that would focus their attentions, but the markets don't crash.
Well, it's good news and bad news. I mean, like I said, the good news is, I hope and I assume we'll get through this. The bad news is I think the United States is going to remain on watch and is at serious risk of a downgrade anyway. Because what this drama has proven is that there really isn't consensus or agreement on the much larger issue, which is what are we going to do about the deficit? I mean, it is very unusual to do what we've done for the last 2 years in the United States, which is run $1.5 trillion deficits equal to 10% of our GDP and allow the debt to pile up so fast, so quickly, and so largely. So to me, I think the United States, this debt ceiling debate is kind of a sideshow. And the longer question is that is still spooking investors, that is making the United States less attractive as a growth economy, is that our deficit situation is out of control. We're not controlling the growth of entitlements, principally.
Well, how do you change your investment thinking based on this, or based on the possibility of a downgrade? Some people say that really won't matter all that much.
No, well, but what does matter is the prospect over the long term of higher interest rates, of potentially higher inflation, and of slower growth in the United States. State of New Jersey, really about 9 months ago, as a tactical matter, started underweighting fixed income and shortening our duration to address this risk. And specifically, we radically lightened up on treasuries. We overweighted U.S. equities, and that was a good bet. Our pension system in the fiscal year just ended on June 30th is up about 18.5%. That's our best return in over a dozen years. And part of that, of course, was we had a good stock market, at least in the second half and early part of 2010, early part of 2011. But it also was we probably gained on the order of $2 billion, and maybe a little more from that tactical shift. So I think investors are already looking at this. One of the reasons there is a very anemic economic growth report out today, one of the reasons job growth has been so anemic, it's not a liquidity problem. U.S. corporates have $2.5 trillion sitting on their balance sheet. They've been sitting there for 50 years. I don't think it's necessary. I think QE2 actually, you could argue, hurt. I think the Fed's actions, I think the combination of loose monetary policy and loose fiscal policy, of pouring money, if you will, into the economy through these deficits, but also the Fed holding interest rates at effectively zero now for more than 2 years, of QE2 with $600 billion, of buying mortgage backs a couple of years ago, at least QE1, you could argue, was maybe necessary. The combination of those things has made people worried about dollar-denominated assets, about the growth of the U.S. economy, because we're spending our money on entitlements and not on things that'll make the economy more productive in the future, like infrastructure, university research, telecom. And as a result, all that cash that the corporates have, they're investing on growing their businesses overseas, frankly, where they think there's higher growth. And the Chinese, our biggest creditor, they're diversifying their portfolio, as they should. They're investing around the world.
Robert Gray, thank you very much for joining us.